Hi guys, and welcome to another episode of this weekly alts analysis series where we take a look at some of the most popular altcoins in the market and show you how to easily identify key levels of higher time frame support and resistances that you can then use to either dollar cost average in or potentially enter some longer term swing trades. So last one of this set 2 of ADA, where we're going through the higher caps and we're completing the top 20 or so. So yeah, we're going to go through ADA USDT and ADA BTC today, and as I say, that will complete set 2. And I think what we'll do next week, if this rally continues in the market, we'll actually go back through set 1 and then set 2 over the next couple of weeks and sort of go over some resistance areas that I think could be good take profit areas, and see how the levels are respected. So first things first, before we get into 88, we'll have a quick look at BTC. So as I say, market is rallying this week. We had another nice bounce off 19k and a really strong reaction to that CPI print of 9.1%. Come down, smack 19k, and then off we went, up only as they like to say. If we break it down to the daily, so this is my daily analysis. We obviously had a strong level at 22.7k, and we've got another strong resistance at 24.2k. These levels originate, I should say, back to this consolidation range that we had between around about the 19th till the 24th of December 2020. As you can see, those levels being respected pretty well. So for me, the positions I'm in terms of my trades and my spot holding bags, I'm perfectly happy to hold until I see a break below 22.7k, so daily close below that, and I'll be looking to exit leverage positions. And then for me, a daily close below 22k would indicate to me that we're back inside the range and we're going to revisit range lows at 19k. So any daily close below 22k, and I will be cutting all spot trades that I'm not willing to hold on to into lower prices. But as we always say in learning crypto, you never want to be all in or all out. You always want to have something in the market and some money out of the market as well. And this is exactly the reason why a lot of people would have been caught out by this rally. But if you still had some money in the market, in terms of obviously crypto assets, then you will still be benefiting from this, even if you didn't necessarily buy the exact bottom. So for me, a break above 24.2k, and we could see a rally all the way up to sort of 29-30k, which is obviously that monthly level, which was the summer lows of 2021, and also the capitulation level. And it's now apparent that that's exactly, or what caused it, I should say, was Elon Musk and Tesla selling 75% of their Bitcoin position. So could be a bearish retest of this level. Personally, I think we do push a little bit higher. I think this level is way too obvious, and a lot of people are looking to try and short it. So we'll probably push a little bit higher, liquidate those eager shorts, and then potentially see some lower prices. But we've got the FOMC next week. So yeah, we'll see what they say, because there's not another FOMC meeting in August. There's quite a big, I think it's about a 6-week gap between next week's FOMC and the next one in September. So all eyes will be on that next Wednesday. But enough of that, let's get into ADA. So as always, we're going to start on the highest time frame, which is the monthly. We're going to get rid of our magnet, and we're going to get our rectangle tool. So straight away, I can see we're sat right on a monthly level of support here, around about 50 cents. So you can see the top of these candles back in May 2018, that's about 35 cents. And I'm going to draw a box from there up to the bottom of these most recent 2 candle bodies, drag it out to May 23, which is where we've been doing the other boxes, mark that as a monthly, just drag it out slightly, happy days. And as you can see, pretty solid level of resistance in the past, this range between 35 cents and 50 cents, and as you can see, price has stopped and looking to turn around here. So in terms of a level of resistance, we can see one straight away. These candle body closes here at about $1.16, $1.17, and all these candle wicks here, and then the candle body closes from March and April 2022 as well. So I'm going to draw a box right underneath those candle bodies of March, April, May 2021. Drag it across, and I think what I might do actually, I'm going to make a small one here which just closes at the top of the candle bodies of March and April 2022. So it's a small range of $1.14 to about $1.19 or so. And then I'm going to have another box which captures the bottom of the wicks, because there's very wicky time between March 21 and July 21. So I can go from the bottom of the wicks and capture these candle bodies here at the bottom of the candle bodies at February and March 2022 as well. So let's grab that. Yeah, and I think that'll do for me. Happy day. So 2 small monthly levels there, but capturing a lot of candle body wicks and candle body closes as well, and they will be areas of interest should we get that high. Obviously it's quite a gap between where we are here at 50 cents and the next range which starts at 95 cents, but we'll see what happens. Just give those a quick monthly tag and then we can move on down to the, in fact, just before we do that, we'll highlight the next monthly ranges should we fall through the current one. So we've got one here really obvious, top of August 2018, which also lines up with the top of July and August 2020 and gets this wick from December 2020 as well. So that range starts from about 14 cents and we'll take it probably down to about 11 cents. So let's grab our tool, line it up with the top. In fact, I'm going to go for the top of the wicks from July and August 2020. Drag it down to that bottom wick. Yeah, just there. I think the bottom of the wick from December 2020. Just make it slightly bigger or smaller. There we go. Happy days. And then just a final level right at the bottom. Very unlikely we get there, but who knows, right? So about 4 cents down to almost zero, really. In fact, no, I'm going to go the other side. I'm going to go just above. There we go. That's where we want it, actually. I'm going to go to the top of that wick of February 2020. So that range is about 4 cents to about 7 cents. Again, unlikely we get there, but if we do, fantastic buying opportunity, in my opinion. Just line those up, give them a quick tag, and then we can move on down to the weekly time frame. So they're the monthly levels for me. Happy days. Move on to the weekly. As you can see, a lot of our work is done, particularly down in these low areas. I don't know whether I would add any weekly levels down here. Potentially here, actually. That's a pretty solid one. So where we're looking at about 10 cents here. So top of these candle bodies in August and September 2018 lines up with these wicks of April 19, May 19, and June 19, and then some of this candle wick and candle body closes here in August, September and October 2020. So let's go and grab all of them. As I say, starting at the top of these candle bodies of August and September 18. Yeah, go for the candle bodies, candle body tops, drag it across. We're going to make this nice and thin because it's in between 2 monthly levels. Yeah, that's it. We're going to line it up with the top of those candle body closes here in June 19 and also the bottom of October, November 2020 as well. Give that a weekly tag. Happy days. Bit of a mid-range that breaks up the 2 monthly ranges. So that weekly level is about, as I say, about 10 cents, 9.5 to about 10.5 cents. In terms of this huge gap between the monthly range, bottom of the monthly range 34 cents down to the next monthly range of 15 cents, I think we've got a level just here. Look, as you can see, 2 weekly candle body closes at the top of them, 28th of May and 4th of June week 2018, and then you got this candle wick right into it here on the Jan 11th 2021. So let's go ahead and get a box in there. So I'm going to go from the top of that wick, May 18, drag it across. I have to make the screen bigger, and yeah, I think just a small level in there, that'll do. Doesn't have to be huge. Just make that a little bit bigger. Happy days. And yeah, just in there. That looks like a nice level to me. And then we'll just go tad higher. So again, as I said earlier on the monthly time frame, big gap between where we are and the next monthly level of around 95 cents. So there's a level just here, bottom of these candle bodies on the March 2022, and also a wick down here at Feb 2022 as well. So I'm just going to pop a weekly level in there. So again, going from the candle bodies, bottom of the candle bodies, drag it across, and I'm going to go all the way down to where that wick stops, because you see the candle body closed below and then the bearish retest there as well on May 2022. So this weekly range is about 75 cents to about 78 cents. As I say, down to that candle wick of 21st of Feb 2022. Give that a quick weekly tag, and that is our work done. So what did that take? Sort of maybe 5-10 minutes. Real easy. As I say, if we do see a decent rally, we could potentially see profits all the way up to 75 cents. So let's see what happens with that. And then we'll go and take a look at ADA BTC. Again, starting with the monthly. So we'll start again right where we are now. I think we've bounced off a support. So you can see you've got these candle body tops from March and April 2019. This candle wick down here, March 21. And then, as I say, May 2022 and June last month, we've had a nice bounce off that level. So we'll go, as I say, from the candle wick down to the candle body, May 23 of April 2019. So top of the wick down to the top of the candle body. Give it a monthly tag, and happy days. Next one down, you got a pretty obvious one here. It's these candle body bottoms of November and December 2018 also lines up with the top of these candle bodies of October, November, December 2020. So let's grab those. Again, going from the candle body bottoms, dragging it across, and I'm just going to take it actually to that wick just there on February 2020, because that captures all of those candle bodies in there. Pretty nice consolidation range monthly, and then we'll go one higher to where we are for a little profit taking zone. Pretty easily identifiable one here, candle body top of February and March 21, also lines up with these December 2021 and January 2022, and also February 2022 candle wicks as well. So let's go for that. In fact, I'm going to go from the top of this candle wick of December 2021 and go down to the candle bodies of February and March 21. Happy days. Let's give that a tag. Cool. So the bottom range that we've got marked out down here is about 700 sats to 940 sats. The current range that we've bounced off is 1700 sats to about 1950 sats. And I would suggest the next target, should we see a rally, a continued rally, is probably around 2,950 sats to around 3,100 sats. And that would be my targets for now, unless we break above this 3,100 sats monthly level. But I think it will take a little bit of time before we do that. Breaking it down to the weekly, see if there's anything to add. Let's have a look. So immediately my eyes are drawn to this wick here from the 16th of July 2018, which lines up, if you follow the line along, lines up with these candle wicks of December 2021 and also March 2022. So let's go ahead and draw that. So right from the top of that wick, dragging it across, capture those candle body wicks, or candle bodies and wicks I should say. Move that, make it a weekly. Happy days. That looks like a nice target, and we just rejected off that a few weeks ago, back in June. We were, in fact, just make that slightly bigger just so it touches that candle wick. There you go. And as I say, most of the work for us is done here. I think maybe one more level down here in between the middle range and the bottom range. Immediately as this candle body closes here in September and August 2018, lines up with this wick here at March 19, and also this little cluster here between July and August 2020 as well, and also this candle wick here in February 21. So I think that's a pretty decent level. I'm going to go for the candle body close of August and September 18, dragging it across, and I'm going to go to these wicks here from Jan 19 and also here in August 2020. As you can see, narrowly missed on that May 2022 candle as well. So let's give that a weekly tag, and that range is between about 1280 sats to about 1450 sats. And there you go, guys, and that's how quick and easy it is to just identify some key higher time frame levels and some nice trading opportunities, I think. As I say, depending on what happens with BTC dominance and whether we see Bitcoin take over or alts rally against BTC, you can obviously take your chances of buying potentially down this monthly range if we get down to it, so about 1950 sats to about 1700 sats, to look for a bounce up to that weekly. Or if we break below that, then you've got these buy areas here between say 1500 sats to about 1300 sats. And then if things get really bad for altcoins, you could grab a nice stack down here at below 1000 sats, which obviously garnered some fantastic profits in the past. If we look at the last bear market, 18 to 19, so this huge consolidation range here down from July 19 to about May 2020, if you bought anything in between there, I mean, you're looking at over 1000% all the way up to the top. Obviously you'd be taking profits along the way, and you probably wouldn't have bought all your stack down here, but you can see the potential gains there. Similar with the USDT pair, you had a huge amount of time to build up some units down here from 2018 to 2019 and even into 2020, and then you can see the huge rewards you would have got as well. If we just take a quick look, yeah, you're looking at over 10,000%, which is just crazy numbers. But just trade it level to level, dollar cost average in, and if you see a level being lost, you can always get out and then reaccumulate on the next level down. So as I said in the beginning of the video, don't be all in, don't be all out, and risk management is always key. So all eyes on Bitcoin, as I say, and the FOMC meeting next week. But hope you enjoyed this video, guys. If you've got any questions or if you've got any requests for TA, let us know in the comment section below. Next week we will have a look at what happens in the FOMC, and based on that, if we see a continued rally, then we'll review some of the SEC1 altcoins and have a look at potential TP areas of resistance. So have a good weekend, guys, and we'll catch you next week.